Here is the U.S. market summary for Friday, July 18th, 2025. The U.S. stock market finished a mixed session on Friday. Equities closed near flat as the market digested robust economic data alongside concerns over potential tariffs. The S&P 500 index paused, retreating slightly after renewing its all-time high in the previous session. Positive economic sentiment continued to build, with the Consumer Sentiment Index for July reaching a 5-month high. This provided additional relief following the rebound in June retail sales reported earlier in the week, which had eased some concerns about a contraction in consumer spending. Before the market opened, Federal Reserve Governor Christopher Waller argued for the necessity of a July interest rate cut, citing slowing employment data. He also stated he would accept an offer to become the Federal Reserve chairman if proposed by Donald Trump, which initially raised expectations for a rate cut and contributed to a higher market open. Governor Waller noted, with no signs that inflation expectations are rising, the Fed has the latitude to move forward with a rate cut. He further contended that a rate cut should be implemented at the end of this month based on data suggesting the U.S. labor market is on the precipice. Andrew Brenner of Nat Alliance commented, "Governor Waller's thinking is correct. The Fed's role is to look to the future, not the past, and he is viewing the slowing employment situation in precisely that manner. Nevertheless, we do not believe a July rate cut will occur." However, the swap market continues to price in a near-zero probability of a rate cut in July. The market turned lower following a report from the Financial Times that a potential Trump administration is pursuing new tariffs of at least 15% to 20% on the European Union. The market leader recovered a portion of its losses as participants interpreted this as a negotiating tactic ahead of an anticipated August 1st tariff letter. It was also reported that President Trump is preparing to enact additional tariffs targeting specific industries separate from country-specific duties within 2 weeks. Furthermore, profit-taking following the recent market rally contributed to the downward pressure. The semiconductor sector in particular saw a notable decline after a U.S. Republican House representative voiced opposition to the export of NVIDIA's H20 AI chips to China. Mark Hackett of Nationwide observed, "The macroeconomic data remains largely positive. However, given the elevated valuations and expectations, the remainder of the corporate earnings season will be a significant test for the market." Daniel Skelly of Morgan Stanley noted, "While uncertainty related to tariffs persists, it appears the market is learning to adapt to it to some extent." Toward the end of the session, a continued decline in Treasury yields helped the market to pare its losses, leading to a mixed close. In other news, President Trump signed an executive order for the Genius Act, a bill related to stablecoins. Some cryptocurrency-related stocks such as Circle and MicroStrategy declined as investors took profits. Meanwhile, despite dovish remarks from the Fed officials, the Fed Watch almost rules out the possibility of a rate cut at the July FOMC meeting. Market participants remain focused on the ongoing earnings season and tariff negotiations. Netflix fell by approximately 5% on Friday despite reporting exceptionally strong second-quarter results. Netflix exceeded market expectations for both its Q2 revenue and EPS. Furthermore, the company's forward-looking guidance for the next quarter also surpassed analyst forecasts. The decline in its stock price is attributed to the sky-high expectations from investors, a consequence of the stock's value nearly doubling over the past year. Benjamin Swinburne of Morgan Stanley, a top-rated analyst, reiterated Netflix as a top pick and maintained his overweight rating. He raised his price target from $1,450 to $1,500, suggesting a potential upside of 20%. Swinburne emphasized that Netflix's investments in advertising technology, and particularly in generative AI, will be key drivers of future growth. He projects that Gen AI will be a core element of Netflix's business, significantly reducing content production costs and enhancing how users discover content. The overall Wall Street consensus for Netflix is a moderate buy, with an average price target of $1,360, which implies a potential of 12% further upside over the next 12 months.